Hey traders, welcome to the Top Tier Outlook. Happy Sunday, everybody. Hope everyone's having a great weekend and gearing up for the new week ahead as we wind down. Hard to believe we are going into the last week of March, which means that Friday, actually not Friday, Thursday, that's going to take me a while to get over, and I hope I don't have to sneeze. All right, hang on. All right, we're good. Okay, sorry. All right, so as we go into the end of the week, which is Thursday this week, as we go into the 28th, shortened week and the last trading day of the quarter. So we are talking about an intense, concentrated week where when we think about the importance of sort of the quarterly report card, think of it as a report card, right? Because if you are managing large sums of money, whoever's money you're managing, they're going to want some kind of update. They're going to want to know, how have you thus far been managing my money? What are the returns for the first quarter of the year? And what do I own? Now, anyone looking at what's happening right now knows there are certain relative outperformers. They know that we're in an uptrend. They know that certain sectors are up on the year. And usually someone who's letting someone else manage their money wants to know, what did you buy for me and how are we doing? Right? What did you buy for me and how are we doing? And so those are things that need to be answered for. And so the end of quarter is really interesting because on one hand, there might be some profit taking, sure. There's going to be some distribution pressure at the end of every month. People want to pay themselves. And we also know that there is a milder version, and yet still a version, of window dressing that will occur at the end of a quarter. Not as intense as the one that happens at the end of the year, but every quarter it's going to have a milder, smaller window dressing event. So window dressing always does two things. Weakness gets weaker. So whatever has been underperforming will likely underperform even more so as we wrap up the quarter, because nobody wants to show on that quarterly report card, here I've got these great bargains for you, but yeah, sorry, they're not performing all that much, but they will, right? Nobody wants to put that on their book. And then a lot of times they're going to take that stuff off their book. And they're also going to want to see, hey, I know this is performing, or maybe they've got crypto on the mind. Hey, crypto's moving and grooving. Do you have me? Do I have exposure to these narratives? So a lot of these things are part of the window dressing conversation, right? So these are all things that are going to happen. And as we're winding down March, it's hard to believe we are no sooner going to wrap up this month, this quarter, and we are at that part. Gosh, 2 weeks from, as we wrap up the end of this week, 2 weeks from the ramp right back up again to earnings. I can hardly believe it. And here we are once again. We no sooner ditch this spectacle, and here we are going to be going right back into it. So I'm not pleased about it, but oh yeah, here comes. Excuse me. That was a sneeze and I knew it was coming. All right, there we go. We know that we have some trends that could have some rally into earnings. That's why I've got financials up here. Financials are an interesting place to look as we start earnings season, because this is really how most people perceive the beginning of earnings season. We get those big bank stocks reporting, and then earnings season is underway. And we're right, like I said, we're right on top of it. So when we take a look at things like XLF, we take a look at things like JP Morgan, these are things that we want to see continue in the direction of the trend that they have been in, right? And, all my cards on the table, JP Morgan is the most recent of 4 open swing trades that we have in the mastery right now. And I say most recent, we took advantage of that dip on Friday, right into the close. This was a closing session setup. Not that I was meaning to do this, but when we got down into the range and the alerts go off and we see the setup, green meets the gray in an uptrend, this is the job. Take the trades, trade what you see, not what you think. I don't like the timing of a Friday entry, but it is what it is. And, off we go. So that was the most recent entry that we have. So 4 open swing trades as we embark on this shortened week. All right. So the next thing is taking a look at how we're opening today. All right. So if I'm seeing it how we're opening today, NASDAQ, what I want to really see right now We can do this together. And this is the same thing that I'll be doing tomorrow in the Sector Secrets Mastery. And for those of you, by the way, who have perhaps sadly missed the trial offer, the 30-day trial offer that we had, we are going to be offering another way to come check out what we're doing at an unbelievable deal coming up in about, I don't know, how many more days before we go into that. Yeah, a lot of folks said, Rog, I missed the trail for any number, 10 days. So April 3, jot that down. April 3, we'll talk about how I'm swing trading right now, what I'm using to swing trade that's keeping our book full of opportunity, our pipeline full of opportunity, and frankly, our accounts up. What kind of trades are we in? I mentioned I have 4 open trades right now. How are we finding them? How are we getting the follow through? It's been a really, really good bullish year, right? Eventually everyone will catch on, but as long as you all understand that we're in an uptrend and we've been taking advantage of this for quite a few months now, it's all that matters to me. Now, tomorrow I mentioned I'm going to do something with the Sector Secrets Mastery folks. On Friday, which obviously was the 22nd, I'll look at the close, and you'll see there the close is 18,563 or 565. Let me double check. 3/4. What was that? 563 and 3/4. So what I do is I just move this little line right over top of that cash close. And that's just a really easy way to understand a very near term, but ridiculously accurate sentiment read. Largely, traders are going to look day to day to day. Is my position today, meaning Monday or Tuesday, whatever day it is, so tomorrow, is my position today, Monday, sitting at a price greater than Friday's close? And when you can look at that previous session cash close, there is inherent to being above the PSC, as we call it. You can see that in the label. There is inherently being above the PSC a certain amount of bullishness. And that's going to help not only with confirmation of just a certain amount of sentiment right on the bell, but it's going to help with day trades too. And so these are really basic things that we can do that increase the probability of trading in the direction of follow through in a really simple way. So 52.89 and 3/4. So I'm going to move that here. 52.89 3/4. And again, as long as we can remain above that level, there's a certain amount of inherent bullishness to it. You can see here on the Dow, 39,827. And I'm just moving these, and I'll do this for anything that I'm potentially going to trade. This could be for crude oil. This could be for gold. This could be for any number of things. So where were we on Friday's close, the 22nd? And then where do we sit in relation to that as we go into tomorrow's session, right? So I'll just really manually quickly look at these. And the cool thing about not automating something as ridiculously simple as where was the previous session cash close, it makes me look at this chart. It makes me look at the color of the candles. It makes me look at the structure. It makes me look at, just a handful of candles where if I was automating things like this, I might rob myself of that very momentary and powerful glance at the actual chart to see, wow, it's mostly green grab candles. And wow, we're still well above the daily price movement range, and we're above the wave, and we're above the propulsion. It's a great way to just sort of keep tabs on things that are easy to sort of automate your way to the point where all of a sudden we're really losing that feel for the fact that, gosh, this crude oil trend is here and here to stay for now. March has been a very good month for crude. So as we go into the 25th, we can say to ourselves, gosh, this has been a trend easily since the 7th of the month, and we're embarking on 2+ weeks of an uptrend. And it just allows me to make all those assessments really quickly. But just moving around that line, so I've got to look at the chart, right? I've got to take a really good look at it. All right. So that's crude oil. Let's go take a look at gold. Gold is something that with bonds on the move, gold is looking increasingly interesting in terms of wanting to get long something like GLD. Not quite GDX yet. What was this close? 21665. Okay. So not quite things like GDX yet because I want a lot of clarity on gold, the underlying commodity, before I try to take advantage of the miners, right? Same thing goes with looking at things like copper and silver and iron ore and looking at the way that maps to, say, XME. It's the same way that, here's another sector really related to uh, commodities, right? Not a direct play on commodities. So, for example, uh, energy services might be a little bit more a direct play on crude oil, or the crude oil ETF would be a very direct play on crude oil futures. XLB would be another sector that's a very interesting and very strong sector thus far. That's a play, an indirect play on commodities. So there are direct play on commodities, and there are a little bit more indirect play on commodities. And these are on the move right now, especially XLB. So again, great to see everyone. Got some questions here. Good to see you. Yeah, Grace, Yee, Mark, D. Good to see you all. JJ asks, thoughts on Diz? Sure, I love Diz. Oh gosh, JJ, Diz has been very good to us in the mastery. We want to get long again. We have the structure that's bullish. We have this as one of the relative outperformers in the XLC. So XLC is the sector that Diz belongs to, but it's in there with Meta, it's in there with Google, it's in there with Netflix, and Diz is just further down the list of the stocks that are weighted there, but it's an uptrend. So what we want to do with something like Diz, let me show you here. Actually, let's crack open the XLC together, and I'll show you where Diz sits. There's Meta. Little choppy. Netflix is in an uptrend, and Diz. So if I were to look at the relative performers in this sector, in this XLC, and I'm looking for where the strength is, what individual stocks would I want to take a look at? Absolutely. Diz makes the cut. JJ, absolutely. Diz makes the cut. And ultimately, what we want to remember is, this goes back to something I talk about a lot in the room, which is there are a lot of markets out there that we can trade: stocks, ETFs, futures, etc. But when we want to trade the option contract of that stock, the stock could have plenty of shares traded per day. But it doesn't mean that the option chain is necessarily going to be as liquid as we need. So XLC is one of those pain in the necks. Love this sector. Would love to find some liquidity. Would love to day trade this day to day. But at the end of the day, if we're trading options on this particular sector, it is anemic at best. There's just not enough open interest. You might say, okay, Rog, what's enough open interest? Enough open interest is at least 500 open interest at the strike that I want. And it's actually remarkable how often we don't even have that much. And you might say, well, Rog, are there other ETFs like this? Yeah, XLK is another one, right? It just cracks me up when folks talk about things like XLK. Unless you are trading the shares, it is very spotty, right? It can be very spotty. Now, it's not terrible. So if I want to look at XLK, let's open up XLK. This is where Apple, this is where Microsoft reside. Right. So if I go out to April 19, and that third Friday of the month expiration should usually be the one with some decent liquidity. We know NVIDIA and Oracle are two relative outperformers here. But let's say I wanted to play XLK and I wanted something like, well, let's take a look. This would be a real setup. XLK, there's my daily price movement range sitting at about 207. I go on over to the option chain. Do I have any 207.5 strikes? I do. What's the liquidity? 371 open interest. That's very thin. That's very thin, right? And then to boot. Now, when you start looking at very thinly traded strikes, what you're also going to notice is very wide spreads. And that's part of risk. So keep that in mind. Just because something looks good on the chart doesn't mean it necessarily maps to a liquid option chain where we can control risk. And I see a lot of traders get into that kind of risk-based trouble that's a little stealthy. It kind of sneaks up on you because you can buy the option, but let's say it's moving against you. When it's moving against you and you have to exit at the ask or at the bid, depending on which way you're trading, whether you bought or sold, you'll find the spread is just going to make your loss worse. It's part of risk. So those are things I always try to try to focus on and things like that. All right. So that's XLK, XLC, got some great relative outperformers there. But remember, the ETF itself, really, really, really a illiquid choice. Visa. All right, let's see. Is my opinion any different than it was on Friday? I think we covered this on Friday. No, no. My thoughts on Visa are this. Let's open this stock up. So do we like? Well, let's start here. Do we like Visa? Gosh, we like everything but Goldman. Goldman finally broke out, and a lot of folks said, "Rog, what do you think of Goldman's breakout?" It's about time, right? Good for it. It's been lagging. There are at least another 10 stocks that have been outperforming Goldman here. So, for folks who've been sitting in this for, I don't know, 2 months, sorry, your capital was locked up in a trade that went nowhere while other stocks were making higher highs, right? So yeah, somebody asked me on Friday, what do you think of Goldman's breakout? It's a laggard playing catch up. Cool. We certainly don't want to be bearish stock in a rising sector. But then what does that mean about something like Visa? So 2 things to note about Visa. Nothing else sold off like Visa did on Friday. And that should get your attention. For those of you that may not be aware of comparing like stocks to like stocks, right? What are stocks that are heavily weighted within the XLF? And, ultimately, what do I want to do with a stock that's in XLF? I want to buy it, right? I want to buy the things that are in uptrends. So then I want to start comparing the pullbacks. So for example, why did I buy JP Morgan and not Visa? Or why did I buy, this particular stock versus something else? Well, the first criteria is it going to a level that I can buy? Meaning the green meets the gray. That's the first thing. The second thing is, since the question was about Visa, I mean, it's not that it's a short, right? It's not that I had a lot of questions about Visa on Friday. It's certainly not that Visa is a short. Please hear me out. I'm not saying that at all. But it had a very dramatic day, right? So my first thought is, why? Because nothing else was. When one stock that's heavily weighted in a group of stocks is having, an anomaly of a day. And by the way, MasterCard did not sell off like this. So it wasn't as if it was something that hit the plastique, the credit cards, it wasn't as if MasterCard sold off in quite the same way Visa did. Now, when you say quite the same way, this Visa's move was way greater than its normal range, right? I think we can see that pretty clearly. It was far larger than its normal range. So, you think about the different credit cards, if you will, jump on over to American Express, right? So same thing. So back to Visa, it's already telling you it's doing something abnormal. Do I think that I want to be a buyer at some point? Absolutely. So here's the way that I'll do it. I wait for a zone to be reached. It went in and out of that daily price movement range. We got into JP Morgan for all the reasons that JP Morgan was not moving in an unusual way. So now I'm going to ask myself, all right, I've got a candle of unusual size. I don't actually know the news about Visa. I didn't look because I just simply wasn't interested in Visa. Not yet, right? So what was the news? I'll Google that at some point tonight. I'll find it at some point tomorrow morning before the bell rings. What I do want to see is that whatever this sell-off was, it took it from just above 290 to just below 284. Are we seeing a pause candle? Are we seeing either an inside candle or the center candle of a minor low pattern? Are we seeing perhaps price reach the mean reversion of the wave, which would be great because let's face it, Visa is a great stock to be long. I just need a setup now. Visa selling off dramatically in and of itself is not a setup, right? But the weakness in an uptrend definitely gets my attention, no doubt about it. So tomorrow, I'll look to see what kind of pause candle we get. Maybe it's an inside day. Maybe it's a minor low. Maybe we get to this upper half of the mean reversion, which is the 34 bar high, 34 bar close zone. Maybe we get into that zone. I don't know what it's going to look like, but I know it's going to be one of probably 4 scenarios. And so depending on which scenario I get, where are we in relation to Friday's previous session close, right? Depending on which scenario I get, then I can start to say, hey, we're seeing a pause or we're not. And then I'll look to see if Visa's interesting or not. In the meanwhile, I'm going to look for things that weren't having an abnormal candle, because abnormal candles mean abnormal risk. They mean unpredictability. That means something's going on that is jarring people enough to move in it in a way that they normally don't. That should immediately get our attention from a risk perspective, right? So yeah, it's definitely on the list, no question about it. But I need one of the scenarios that would show me a pause candle to emerge, and then we'll get to work. And that's really it. That's the only answer there, right? I like it to the long side, but I don't have a setup quite yet. And I like JP Morgan to the long side, but I did have a setup. There are a number of things in XLF that are looking very appealing. And American Express would probably be another one of them. But like I said, we went with JP Morgan. And that's where I sit. We've got exposure in, oh, by the way, the four swings we've got AbbVie, we've got BITO, we've got JP Morgan. And for whatever reason, I must have had a very relaxing weekend, because what is the fourth stock? Bob, what's the fourth stock we're in? AbbVie? Hang on, I'll just look it up on my, I'll look it up. AbbVie, BITO, and AMD, right? AMD. I hate trading AMD, which is clearly why I totally went blank on that one. It's a play on semiconductors. I know, AMD. It's so funny how I blanked out on that one. Yeah, BITO, AMD, AbbVie, and JP Morgan. So we've got a little crypto exposure, healthcare exposure, little semiconductors, and financials. And I usually don't trade AMD a whole heck of a lot. So, yep, we got AMD as well. All right. And you might say, Rod, why not AMD? I'd rather trade, if we can get a setup in semiconductors this week. I'm not ruling it out at all. So that's what we've got coming up. So Wall Street's the one place they throw a sale, and folks don't seem to like to come. Let's take advantage of the sales, but make sure it's something valuable. In our parlance, valuable is going to be an uptrend. We just don't buy any weakness, right? We want to buy things that are in as valuable a position to go on sale as possible. So it's a real deal. It's a real value. It's a real blue light special. And we've been getting blue light specials quite consistently, right? There's been blue light specials consistently in semiconductors. There's been blue light specials consistently in NVIDIA. If you've been waiting, though, for a mean reversion, that would probably be pretty frustrating. I would agree. We're not waiting for mean reversions in the Sector Secrets Mastery. We're using the daily price movement range to be able to take advantage of these sales that, quite frankly, are invisible to people who don't have the daily price movement range, who don't have an ability to see where the volatility-based support is in the context of these either outperformers or uptrends. Now, AMD is not an uptrend, but it's generally been an outperformer. AbbVie is not an uptrend any longer, but it's a beautiful mean reversion. So we've been definitely taking advantage of these sales that have been happening, and we'll just keep doing it. All right. So as always, gang, thank you so much for joining me for Top Tier Outlook. I'll see you tomorrow in the Sector Secrets Mastery. And before that, I'll see you all in our charts and coffee first thing. All right. Be good to each other, gang. I'll talk with you soon.